All right, PDAC 2025 with Corey Diaz. We're talking uranium. Let's have it, man. Corey Diaz, Anfield Energy. Corey, how are you, man?
Well, you?
So I'm glad to kick it off with Corey, a dear friend who's now cashed up and ready to go. So, Corey, I gotta ask, man. You know, uranium is like the unloved commodity right now. You know, it's kind of, you know, I kind of have a barometer on Twitter and X, right? I'm like, you know, when you start to see this level of pessimism, I want to get bullish, right?
Yeah,
right?
of course.
But let's frame that pessimism, right? So it's not without warrant because the price of this spot price has gone down. Could you talk us through basically uranium, like the uranium market right now, what's driving this bearish sentiment, and how much weight we should put on the price of these benchmark prices? I know there's a short term and the long term, but maybe you can talk about both of those.
Sure. Look, I think uranium, you know, in the 60s, you know, obviously it's bearish in a lot of views, but I think at the same time, it's just a question of uncertainty. The market has been a little bit volatile since, you know, the election. We haven't heard a lot about what the strategic plan is moving forward in the United States in terms of what they want to do. There was a plan in place in the previous administration, kind of had a path. So look, at the end of the day, I think you've got that. You've got, you know, the Russian sentiment. You know, a big part of the driver last time was the fact that, you know, Russian material might not even come to the U.S. That may change. That may reverse. So that may mean there's a bit more material coming to the West. You know, that said, fundamentally, nothing has changed. You know, the U.S. is the largest installed base of reactors in the world, produces less than 1 million pounds a year, needs 50 million pounds a year. And so production is required in order to keep those things running, right? So it doesn't matter where the spot price is. And once again, the spot price doesn't represent the entire market. Spot price is probably 15 to 20% of the market. Well, the contracted market is where, you know, the serious players are.
So investors are solely focused on the spot price, which is 15 to 20% of volume getting done.
That's right.
But the long-term price is, you know, it's and that dynamic. It's just like, you know, we had this period where it hasn't changed. AI has definitively been a step change.
Yep.
That hasn't changed anything, right?
Yeah, no, I agree. Look, you know, you can't depend on the spot price as a reflector of where the market is.
Yeah.
You've got to look at where the contracts are. You've got to look at where demand is. You've got to look at where supply is. You've seen supply dwindling.
For sure.
You know, there have been some issues in Kazakhstan, the Inkai mine, the lack of acid for Kazatomprom's, you know, projects. You know, if there are fewer pounds in the marketplace, but yet demand is growing, what does that usually mean? It means the price goes up. And those prices going up is the contracted price, right? The guys who know they need material, they're not waiting for the spot market. They're actually signing contracts to secure supply.
So, the U.S., you have an asset in the U.S., assets in the U.S., specifically the milling asset, but let's talk about U.S. pricing. And, you know, we talked a little earlier about, you know, just this decoupling. You know, if you have assets in the U.S. versus you having an asset anywhere else in uranium, talk about the differential here. And I'm gonna draw a parallel here. WTI oil versus WCS, if you're a Canadian follower of, you know, Western Crude Select. Talk about how you think this market could evolve, because it's interesting.
Sure. Look, I think if tariffs are placed on goods coming in from overseas, I think there'll be a premium placed on material that's in the U.S. already, because even those parties who are outside who can sell uranium into the U.S. may choose to find another market, you know, in order to make sure that they can secure the highest price possible into their pockets.
Sure.
So my view is there's going to be a bifurcation in the uranium market. You'll have a U.S. price and a non-U.S. price. And the pounds in the U.S. will be valued at a premium, especially because those parties in the U.S. are going to have a bigger challenge trying to get pounds in from overseas. So we're in a great place. You know, we've got, you know, licensed capacity 3 million pounds. The U.S. uses over 50. Will be easily absorbed. You know, all the pounds that could be produced in the U.S. in terms of capacity probably represents less than 60% of what's required if you're at 100% speed, right? And it's unlikely that anybody's going to be sitting at 100% capacity utilization. So that in itself is going to tell you that the pounds in the U.S. are going to be extremely valuable. And so that's why I think there's going to be a premium on those pounds versus the pounds from overseas.
Guys, listen to that. This is the WTI moment that's happening in uranium. So that's macro, Anfield Energy. So lots happening. You guys got a strategic investment from UEC, $26 million. That's a lot of money. They obviously value an asset that you guys have, but talk about that investment from UEC. And UEC is one of the big players in the industry. Like, if that is not a vote of confidence in what the strategy you laid out, well, talk us through how it transpired. Like, give us a little bit of the backstory and where it's going.
Well, look, we've had UEC as an investor since 2022. We completed a transaction with them, a few years back. They became a shareholder at that point, roughly 10%, and we've had a good relationship with the company for some time. UEC is kind of the leading U.S. Producer of uranium, and they actually have a lot of hard rock assets within their portfolio. They're ISR, but they have hard rock assets. In our view, there's always an opportunity to do business with a company like UEC because we know that the assets are really good, and we know that continued investment from a company like UEC is something that very few people have. Right? To have a partner as a multi-billion-dollar company is helpful and happy to shepherd you through the process to get you to the point where you're a significant player in the market. And for UEC's perspective, they're like, well, we're a hard rock company, but having exposure to that hard rock as an ISR producer, having exposure to vanadium, all these things make sense as an investor. So UEC is not just a producer, but they're a savvy investor. They understand the opportunities that where they don't have to go down the path themselves, they could benefit from the uptick and the advancement of our assets. So I think UEC is a great company. They put in $50 million at a premium to the market. They put it in at 14 cents.
Amazing.
Right? So that's a sign of confidence as to where they expect the company to go and surpass. Because they're not going to just look to break even. They're going to want to make money off their investment.
Yeah, of course. And that kind of, and so it really is the vote of confidence. And maybe just pivoting to the crown jewel. The crown jewel. The milling, right? So in terms of uranium, the milling bottleneck, Shooting Canyon Mill, talk about the value of milling. Maybe just for those who don't know why it's such a valuable asset. There's a limited number of these things, and it's getting consolidated, but talk about it.
Sure. Look, in the United States, there are only 3 licensed, permanent, and constructed conventional uranium mills.
Yeah.
We own one of them. We bought it in 2015. UEC just bought one back last year, the Sweetwater Mill. UEC is a multi-billion-dollar company. The other one's held by Energy Fuels, White Mesa Mill. That's a billion-dollar company. I think just alone, looking that we're in the same stratosphere as billion-dollar companies plus, shows how valuable having the ability to process material really is.
Yeah.
The difficulty of getting a license in the United States, it's quite high.
Yeah.
It's very, very difficult to find one of these licenses, get one of these licenses secured. Because not only do you have to get the license, you also have a place to build the mill. A lot of NIMBYism still exists in the U.S. No one wants one of these in their backyard. So the fact that we've been able to bypass that entire process and be 2 years away from production.
2 years.
2 years. Yeah.
Let's go.
It's so advantageous to having a mill in place, right? So from our perspective, mining aside, there are lots of companies with interesting mines in the U.S., but without the ability to turn those mines into yellowcake.
Yeah.
There's not a lot of other value that can be added. So from that perspective, I think for us, this mill is such a game changer. And the fact that the other parties with mills are significantly north of us as a valuation means that valuation gap has to close. They're not coming down.
No.
We're going up.
And final piece here, the steps, the 2 years. Talk us through. This is an exciting 2-year period where you guys have a goal in mind. Talk us through what needs to get done to get Shooting Canyon back to running.
Sure. So right now we're in the process of getting their license renewal in place. the license itself, we have a license, but we're looking to move it from standby status to operational. That's the process we're going through with the state right now. Expect another 9 to 12 months in that process. In the interim, we can do some work at the mill. We can look at demolishing some of the items we won't need going forward. We can also look at changing out the generators at site, changing the electrical, to have power at site. So, once we have the license approved, we can then run and move forward. I think it's important to talk about the mill, because there's obviously mill construction, but also the mines that will go through the mill. So Slick Rock, Velvet Wood. Slick Rock in Colorado, Velvet Wood in Utah. This is the triumvirate.
Right.
These are the mines.
Hub and spoke.
Exactly,
Hub
the
and
hub and
spoke.
spoke. These are the assets which form the basis of our PDAC that was put out. Pre-tax valuation $238 million US. The idea now is to expand, work at Slick Rock. So we're going to move forward with a plan of operations there by the end of the year. And hopefully early next year we'll have a large mine permit. On the Velvet Wood side, we're going to get the plan of operations approved in the next couple of months, after which we'll be seeking out the large mine permit. The idea is to have those two assets available about 6 months ahead of the time that the mill is finished reconstruction. So once again, all these things work together. Nothing works in isolation, but the idea is to continue to have this triumvirate in place. We may look to add some other mines in. As we're looking to increase production capacity at the mill, we can add in some more mines as part of the process. And part of the application does move us from throughput of 750 tons per day to 1,000 tons per day, but also production capacity from 1 million pounds a year to 3 million pounds per year. So lots of moving parts here. And notwithstanding the fact that we're going to list on the NASDAQ.
Well,
right?
Sorry. That was the other piece.
Is that a good segue?
That was the other. So, sorry. I'm like, wait a minute. The NASDAQ uplist, talk about the importance of that. We've talked about this in the past, right? Uranium companies listed in America versus uranium companies listed in Canada.
Yeah.
It's a reality. Talk about it.
It is. Look, we're a U.S.-based company in terms of all our assets are there. The fact that we can get exposure to U.S. investors, people who are interested in things that are happening in country, I think is so important. The market it's the biggest market in the world for investment, so why wouldn't we want to be there? We have a QB listing right now, but it doesn't have the same impact as having a NASDAQ listing. We've seen other parties go into the U.S. and be very successful on the back of that kind of listing. So we want to tread that same path.
Amazing.
And open up the doors to greater investment.
Corey, always a pleasure. Uranium, it's not over. It's just starting.
Exactly. Early
Especially
days.
in America.
Early days.
Corey Diaz, Anfield Energy. We're at the PDAC Grizzle Showdown. Started up.